Assalamu alaikum, everyone. I'm Humaira Kamar. Welcome to HBL Market Insights. The Monetary Policy Committee of the State Bank increased policy rate by 25 bips to 7.25%. This was the first notional change in the policy rate after a period of almost 15 months. This was a proactive approach by the State Bank, and we feel a step in the right direction to gradually achieve mildly positive real interest rates and to have sustainable economic growth. There were concerns on the imports front as it was hovering around $6 billion over the past few months. And as a result, current account deficit increased to $2.3 billion in the first 2 months of this fiscal year. As a result, we saw pressure on the currency front, and we will see its resulting impact on the inflation in the coming few months. However, the central bank has maintained its inflation forecast of 7 to 9% for this current fiscal year. Exports and remittances have maintained its upward trajectory. However, we could see some slowdown in remittances once travel restrictions are lifted. The central bank has highlighted that domestic economic recovery exceeded its earlier expectations, as is evident from import growth, which is driven by both turf facility along with increase in global commodity prices. We have also seen strong demand coming from consumer financing. As a result, we saw increase in cement sales, auto sales, in electricity consumption, and we have also seen credit growth in fixed asset investments along with working capital loans. I have with me my colleague Faizan Ahmed. Faizan, we would like to share your views on the monetary policy statement. Over to you, Faizan.
Thank you, Umaira, for the roundup. In order to fully understand this monetary policy decision, it is imperative that we see it in light of what has transpired over the past 1.5 years. State Bank of Pakistan went on an unprecedented spree of monetary easing, whereby the policy rate was slashed from 13.25% to 7% in a matter of few months. The objective was fairly straightforward: to prevent the economy from stalling and to protect employment. 1.5 years forward, State Bank has shifted its stance to safeguarding what they have achieved over this time period. While the actual quantum of rate hike may not be significant, the shift in mindset from promoting growth to anchoring inflation and containing current account deficit indicates our entry into a new interest rate regime. The objective now is to disincentivize consumption, which is fueling the growth in imports, and promote savings. This is something State Bank of Pakistan intends to achieve by targeting mildly positive real interest rates. With this in mind, market participants have already started factoring in future rate hikes into the spot yield curve. As is, secondary market yields have increased by 10 to 35 basis points across different price points after the monetary policy announcement. If history is anything to go by, this 25 basis point increase is the right, albeit the first step in this contractionary monetary policy cycle.
Thank you, Faizan, for your views. We'll keep you posted for any new market developments. Thank you all.